All right, let's break down my trade on SPX today. So when I'm trading SPX, I do like to look at ES as my guide. Some people like to use SPX index. Others like to use SPY, but I prefer the ES because I can get the level 2 and the time in sales. So if I'm using the SPX index, you don't get the level 2 because there's no data going through. There's no orders trading. It's not a traded, it's an index, so it's not traded. So I do prefer to look at the ES and the futures just to give me a better idea of the price action and how things are working out. So this is my preference. This is what I do, but you can kind of do what works for you. So let's get into the trade here. We were gapping down and I was looking at this key area, which was 38.75, around 38.75. And that was my kind of trigger for having real conviction in the trade. And I was also using this 38.82, 38.83 area as my guide for risk. So when I'm using these levels as my guide as a risk, I'm not going to be stopping out of a trade if I'm seeing candles go over my level. That's not how you should be managing your risk. What you should be doing is waiting for candles to close above your risk level to ensure that you are indeed wrong on the trade and your thesis. So had I stopped out in this trade over here, as you can see, I would have missed out on a really nice trade. And the reason I like to wait for confirmation whether I'm getting into a trade or getting out of a trade is because you can get shaken out very easily, and especially if you're trading SPY or futures. So I always like to wait for candles to close above my risk level or below my risk level if I'm getting long to confirm that the trade is actually going against me. So in this case, I had no reason to panic. I was in a starter position here right at the open, went against me right away the trade, but I had my level, I had my guide. I wanted to be in the trade just in case it did go down immediately, and just sold off completely at the open. But as we can see, it did go against me for a bit. It popped up here, popped into my level, and it was struggling at my level. So as soon as it started to fail there, I was using the price action as my guide, and then I added to my position into the full position here, and we got that nice follow through move, which I was looking for right at the open here. So my main targets today were 38.50 actually. I was looking for this break over here, the 38.50s, and they were holding this level very well today. I was actually looking for my bigger picture target was 38.31, 38.30, right around there. And if we zoom out here, I'll show you guys why these levels were important. So as you can see, the top levels here that I drew were key levels. This one was my risk, my guide for my risk, because we had this bottoming support here, this action on the prior day, and we bounced very aggressively from that level. So that tells me this was a strong demand level. So when a demand level breaks, we know that it becomes, or it should become, supply. So that's what I was kind of anticipating here, and it did indeed run into that level, and it held it as supply as we anticipated. And what I was looking for next, the next confirmation, was the break of this key level, this 38.75 area, because as you can see, this was a breakout zone right around here. We broke out on this day, pulled back, we held it as support, rallied, had it next day, we pulled back into it again. The buyers held it as support again. They were buying. There was strong demand here. We made a big rally from that level, came back here, and then we broke down today. So today we were gapping down right around this level, and that's what got me interested in the short side, because I was confident they were not going to be able to hold this level again for the third, fourth time, because as you guys have seen in my supply and demand video, the more times a zone gets tested, the less likely it's going to hold, because those orders have been filled, right? So those orders that were waiting to get filled here, there can only be so many orders, right? So once they get through those orders, they're the sellers or the buyers, they take control depending on which direction you're going. And in this case, the sellers took control today because we are really extended on this chart as well. If we can look at the daily chart, we've made quite a big move here from this 37.30 all the way up to 3,900. So very big move without a pullback. Today was a great day to expect a pullback, and that's what we got. So getting back into the trade here, so I locked in a decent chunk of my position here, and again, I was looking for that bigger move, a really big picture move today, and unfortunately we didn't get it. But what I wanted to talk about in this recap is how to set yourself up in a good position to either, make good money or make great money. So I set myself up today to make either a good profit or a fantastic profit. And the way I did that was by paying myself into the move and then allowing a few contracts to ride in case it wanted to give me that big follow through move. So today was either there was going to be two scenarios today. After I took my profit, I locked some in, I paid myself. There's only two scenarios that can happen after that. I'm either going to stop out the rest of my contracts for maybe a flat or small loss and just lock in those contracts that I locked in earlier for a nice profit, or the trade's going to give me very nice follow through, break down and reach my final target, which is a much larger target, and it's probably lower odds to reach that target, but that's why you take profits and lock in a good chunk of your profits beforehand, because you know that this trade is not likely to get to your bigger target. It could possibly, and it has the potential to, but the bigger the target, the less likelihood of it reaching, right? So that's kind of how you have to look at your trades. The context really matters in terms of what's the likelihood of your trade getting to your final target. And in this case, I thought it had potential to get down to those the 38.30s, but in this case the buyers didn't want it to get under 38.50, because as we can see, this is also a demand zone. So we can see this right around here. So we got these levels over here. So this was a prior breakout level as well. It was previous supply. They broke through it, became demand, and we headed higher. So coming back into these levels, the buyers clearly were interested in buying over here. So they were holding this level up. They were accumulating it here and higher lows. And that's when I could tell the trade was not working. So I had to just cut it off there. I think I took a break even there, break even trade on the rest. And then I locked in that pretty solid profit in the morning. So I was recognizing that they were accumulating here in this zone while I was watching the price action. But as I've mentioned in prior videos, I do like to let my trades work and follow my plan, regardless of what I see in the price action. Now, sometimes I will make discretionary decisions, and in this case, I could have said, you know what, I think they're accumulating here. I want to sell all my position up here because I think this is a zone they are accumulating, and I don't think it's going to go any lower. I don't think the SPY or ES is going to go any lower. So I could have made that decision, and in fact, I was thinking about it. But I decided to stay in my position and follow my initial plan and just stick to it. Because I knew the worst case scenario is that they were going to hold this level and then they were going to stop me out for maybe a flat trade or a small loss on the rest of my remaining contracts. And that's what happened. That was the worst case scenario. And the worst case scenario is that I had a pretty solid day. It could have been a monster day, but it was a solid day. So I'll take that over losing any day, right? So it's important to put yourself in these positions where you're in a really good position, you're in the driver's seat, and that's when you want to be very patient with your trades when you are in the driver's seat. And when you're not in the driver's seat, when trades are not going in your favor, they're not going your way, say you take a loss right out of the gate, that's not when you want to be pushing it and being patient with your trades, because you never know, right? You could take another loss and just adds up and accumulates, and then you'll end up with a big red day, right? So know when you're in the driver's seat, know when the trades are working in your favor, and try to be patient with them, because the worst case scenario is you pay yourself, you lock in a good chunk of your profits, and then let the rest ride, and whatever happens, happens. It's either going to pay you out really nicely, or it's going to just be a flat trade, and you just have those initial shares or contracts that you locked in. And that's not too shabby, right? So that's the recap for today, guys. I hope you learned something here, and we'll see you guys in the next one. All right, cheers.